Let's get to Oliver Haarmann, who is co-founder of Searchlight Capital Partners. Oliver, lovely to see you. Look, we talked at the top of the hour many things that people are beginning to be cognizant of. And I hasten to add, not everything we mentioned is going to come to fruition. Citrini was a great piece of research, but a lot of it won't happen.
Yes.
Mr. Taleb absolutely talked about black swans. That's how he's made his name. And it's absolutely right. He should talk about some of the concerns out there as well. But in terms of what you see happening at this stage of the cycle, just typify it for us.
Well, I think, first of all, the markets, and which is what we live with every day in the public markets, right? They're constantly assessing risk. You know, that's ultimately their job, right? They're trying to assess the risk.
I don't think they are, Oliver. I think they only do that at periodic times as well.
Well, I think they're trying to assess the risk of the future cash flows and earnings that these various companies could generate, right? And sometimes they'll gravitate more to euphoria, and sometimes they'll gravitate more to fear. And I think we're definitely in a moment right now where we've seen these big swings from euphoria. The world is going to be amazingly automated and everything will flow, you know, through these AI systems and tools, and all this CapEx being spent will have excellent ROI, to fear, you know, is there really going to be a good return on all this capital that's being spent? And two, what does it actually mean if we start creating too many efficiencies and white-collar jobs start disappearing through AI programs? So I do think we're in a moment where every day there's going to be a lot, for many months I think we're going to see a lot of market volatility as everyone is trying to figure out what will happen and how fast will it happen. And now you're right, the Citrini report, I don't know if I'm pronouncing that correct.
Yeah, I think you're spot on.
Painted a very dark picture. You probably have to attach a low probability to it. The question is, how low of a probability do you attach to it? It's very different if it's 1% or 10%, you know?
Yeah, look, and I'll go back to the market being a price discovery mechanism.
Yes.
And I think we're on the same page. It's almost like, to use option terms, it's like a straddle. 1 minute, as you say, euphoria, next minute, pessimism,
That's
both
right.
irrational. But it's the bit in the middle I like as well.
Yes.
And that's when the market does get its pricing right, when it kind of has this discovery period. And I actually welcome what we're seeing now as people are beginning to ask individual companies, individual sectors, can you make this work financially? And I really applaud this phase of the market.
I agree with you. It is interesting. Obviously, we're in the Searchlight, we're in the private equity markets.
Yeah.
So we have a slightly different, you know, we have the luxury that we're not being marked day to day on our portfolio, right? So we have the chance
But does that mean
to think longer term.
Does that mean the exuberance lasts a bit longer? Because dare I say it, the valuations that we're seeing on some of the mega names that are desperate to come to market in 2026, and they seem to desperate to leapfrog each other as well, despite talking about...
You mean the IPO pipeline?
I mean the IPO pipeline. So I just wonder whether the private markets, because obviously the IPO is where it meets the public markets, whether actually the shoe has dropped in the private markets yet.
I think you're right. I mean, let's take a step back. You know, we haven't had a lot of exits in private equity over the last few years, and that's due to several factors. But the fundamental issue facing the private markets has been one of excess leverage at high interest costs, right? There were a lot of deals done 21 as we were coming out of COVID in that euphoria period. There were a lot of deals done at high valuations with very high leverage levels. And so that doesn't give you much flexibility when there's any downturn. Then what happened is interest rates started rising, and you're in a situation where you might own a business that's generating cash flow that you can reinvest for growth. All of a sudden, you've got higher interest expenses, which you have to meet, so you have less cash flow to invest in your growth. And you're stuck in businesses that you might have paid a big price for, and you can't change it because you have that much of borrowing, and the interest expense is eating up your cash flow, so you're not growing as much as you'd hoped. And that's what we used to call, I think jokingly last time I was on, zombie companies. And I think, you know, there was a moment of euphoria where a lot of very large software, especially enterprise and software deals, were done at these very big multiples, you know.
Indeed they were. We remember what it was like post-COVID.
Yes.
Some of those connecting softwares, Teams for instance, or all the calls that people were placing, the remote working that software was facilitating. But now it feels as though the Achilles heel for private equity and for private capital is the software market. What was so great about it, and I think we've probably spoken to thousands of these software companies over the years, is that they had the recurring revenues, very high margins, and customers that were so reliant on the product. Does any of that change in coming years?
I got to tell you, this is fascinating because we're living in such an interesting world right now, okay? We have at Searchlight, we got on this AI trend kind of early, and we hired our own in-house kind of data analytics AI expert team, and we have this in-house innovation team. You know, especially a lot of our younger professionals, they're part of this, you know, with the actual AI professionals that we have. And I was sitting yesterday, we sometimes after investment committee every Monday, we carve out half an hour to see what those guys are doing. Yesterday, I was sitting there, and a couple of our young folks took a software called Replit, which is something that creates vibe coding, which is what you're talking about. And they actually were able to replicate the functionality of a CRM system, which we've paid a lot of money for, and that a company that created that CRM system for us is, I'm sure, highly valued, because they always chuckled, well, once you have our CRM system, you'll never switch, and you have to pay us, you know, monthly fees. Now, these young folks who are financially trained, business graduates, we created a functionality of our CRM system. It took them maybe an hour, and the fascinating thing is they were able to customize it in a way that actually met our needs better than the CRM stuff. And you know, you're thinking, this is unimaginable. If you're a shareholder in one of these software companies, you would have attached a 1% probability in your, you know, scenario cases that you could actually get absolutely, there would be a substitution of what you do so rapidly. So
Oliver, the companies that we've been asking questions
of. I learned this yesterday, so I'm fresh. You know, it was an eye-opening moment for me.
You've had to move quickly and think about business plans when you see them being disrupted. And the pushback we've had from companies that we've interviewed, and we've said this is possible. They say to us, well, what about the data management? I mean, you know, you want to make sure your data is secure. Would you trust a system like that? You know, you need to work across the organization. This is just one particular service that you can plug data into. I mean, aren't there still obstacles to replacing all of your software?
There are always obstacles, absolutely. There will definitely be obstacles, but let's not forget, the market always looks forward, right? So the market's thinking, sure, there's obstacles, but they'll figure out a way, because there'll be a clever cybersecurity company that allows you to build walls around it, and in 2-3 years, some of those could be manageable. So the question is, are those obstacles, you know, structural, or are they ones that you can manage? And I think people are just very concerned that these obstacles, you know, it's not going to happen overnight. We're not chucking out our CRM like tomorrow. I didn't immediately call our CIO and say, we're done. But we are saying, wow, you know what, this is going to fundamentally allow us to work more efficiently. And our team feels ownership of this information. And now the interesting thing is, you know, we'll obviously have to bring in a cyber, you know, firm on the security side and make sure it's all safe. But maybe in the next 12 months we'll actually do this. You know, it's not tomorrow, but in the next 12 months. So it's really, really fascinating. I'm learning, and you know, one of the funnest things as you get older is if you keep learning. Kind of keeps you young. And we're in a moment right now where I'm learning every day, and it's fascinating. We're living in a really fascinating time.
I speak to all these CEOs. Ben's going to come in, but curiosity. If you don't, and a lot of the CEOs I speak to, on this podcast, if they don't remain curious, they just don't enjoy their jobs, and they're not good at their jobs.
To your point about
curiosity is important.
Yeah, I think so.
I think we're all learning as we go along with this. When you talk about the security, I was mentioning before about how Anthropic is rolling out a new tool that, as part of Claude, will allow it to search for vulnerabilities in other AI applications. So the cybersecurity firm that you may have been using now potentially also faces that same challenge. But I'm just intrigued as to your company has obviously seen a way of reducing the costs involved in the CRM software through the way you've described. The winners out of all of this disruption will be other companies that harness AI to reduce their costs and increase their margins. Where do you see that happening? Which are the ones that you think are using it to their benefit?
Well, first of all, you mentioned Anthropic. Last week when I was on the same innovation call, where yesterday I learned about Replit, last week we had some of our young people in this sort of innovation team take one of our, you know, we build a lot of detailed financial models to model the, you know, companies that we might be looking to value, what's their future cash flows, and we go into a lot of details. What are the revenue lines, what are the different operating costs, you run different scenarios, and we have a whole team of people who put together these financial models. Last Monday, we had some of our young guys do a demo where they fed a lot of data in a company that we're looking at into Claude, the latest version of Anthropic's Claude software, and asked it to build an Excel spreadsheet saying, you know, these are the revenue lines I'm interested in. Can you look at all the historical data? These are some of the projections I'd like. You know, these are different cost drivers I'd like you to look at. And they'd created a financial model for us within 20 minutes. Then it used the same software to correct errors, and are we doing tax right? Are we doing this right and that right? To create a model that actually replicated that work that some of our young, financial analysts are doing. So I think you're right. The automation is going forward and forward and forward.
Does that not worry you though? Because that sounds like one small step away from putting into it, design me an optimized portfolio.
Yes. Absolutely, absolutely. I think that's definitely something where we're headed, especially on the end of the investment market that's more automated, quant-driven. I think in private equity, where you're ultimately still driving businesses, you're acquiring them with a vision for change, with a vision for how do we run this company differently, how do we pull in all the management tools and all the resources to help affect change. You're a bit more insulated from that because that still requires a lot of judgment. And ultimately, at this point in time, human judgment and, to Steve's point, curiosity are still massively differentiators. So you definitely want to, in the investment world, try to live in that world. We're matching curiosity and judgment as opposed to in one where you're just crunching massive amounts of data.
Curiosity, judgment, and trust was the thing that Kathy Clay from S&P
of course.
Market said to us, that actually trust, that is one of the crucial barriers.
And you'll be pleased to know, I've just done a quick search on who your CRM provider is, and it hasn't come up yet. So I still don't know whether it's Salesforce.
I don't want to name any specific companies.
No, I know you don't, but I thought I'd have a look anyway to see whether the World Wide Web told us, and it hasn't yet.
We'll do that off camera.
But to answer your other question, which is, which was how do you think about how some of the winners are? So that was also kind of what you were asking me. I mean, we started pivoting our portfolio already 3 years ago. More, we invest a lot in services, and we kind of pivoted from, the white collar driven, information based, knowledge based sectors, which were very attractive because they had high margins, good growth, good return on capital, increasing valuations. We sold out of a lot of them, and we started moving into more kind of blue-collar service-driven sectors that are doing repair, maintenance of large, often, actually we've been kind of focused also on infrastructure because we felt like these are things that aren't going to be displaced with AI. You might be able to run those companies slightly more efficiently because you can improve your processes, you can do a lot, gather more information more effectively to get whatever environmental permitting, whatever else you need to do. But they're actually, and they used to be a bit more out of favor because you had to manage larger workforces, they had slightly lower margins. Now they're actually coming back into favor because people are saying, well, they're still going to be busy because you still need to send the physical person out there to go and do the work.
Yeah, until the robots are deployed down the track. When the robots get going from those factories, then maybe that's a different story. Oliver, thank you so much for joining us. Oliver Haarmann with us, founding partner, Searchlight Capital Partners.